We're back. We're back. Just let's see if there's any news. I don't think there's really anything. Market's down quite a bit again. I know, it actually recovered. The market was down quite a bit earlier, but looks like it bounced. Commodities are selling off, which isn't surprising. I feel like runs like that can only last for so long. What's up, Moose? Trump warns U.S. will blow up South Par's gas field. Trying to stay awake at my desk. This is the wrong stream for that. The stream will make you go to sleep, bro. There's not much news. Micron CEO says it can't deliver enough memory. NHTSA probe of full self-driving and reduced visibility. What's that? Escalated investigation into Tesla. Tesla's FSD is looking into possible safety defects that makes it risky for drivers to use in fog, glaring sun, or other reduced roadway visibility. Oh, I could see that. I could see that. Either the stream or silence. Fair enough, fair enough. Did you watch any of that Afro Man shit, bro? That shit's funny, dude. That Afro Man trial was hilarious. I haven't listened to all his songs. Yeah, before the trial, he made a bunch of songs about like all the officers. It's Afro Man's a genius, bro. Afro Man's a genius. Yeah, there's a few of them. But that shit is funny, bro. He's so smart. Chuck Norris is in the hospital? Nah. Chuck Norris can't die, bro. He's 86? Holy. I didn't know he was that old. Medical issues unknown. That's crazy, bro. I didn't know Chuck Norris was 86 and he's still out here sparring, bro.
I don't age.
He's still out here sparring? I don't age. That's sad. Hopefully he makes a good recovery. Cherry cheese gifted by Cherry Cheese. Cherry trees. Symbol of friendship between Japan and UK have been stolen. Alright. Where's Muma? I don't know. I don't think they're gonna be coming to the stream anymore. Who knows? Who knows? The Costco CEO did a taste test. They have a video of it.
I get a hot dog. Thank you very much. Take care.
Music. No. Why is there always music?
For this hot dog?
$1.50? He's acting like he's never been in his own fucking Costco before. For this hot dog? $1.50? I ain't ever been in a Costco before. I'm the CEO of Costco, but I didn't even know we sold these. I didn't even...
The hot dog price will not change as long as I'm around.
The hot dog price will not change as long as I'm around, he says. Oh my fucking god, bro. So stupid. Official Pokemon wedding rings? What? Official Pokemon engagement rings are now a reality, giving fans the chance to propose with a special I choose you moment they'll remember forever. God, that is so dumb. I don't know if I can read news today, bro. I don't know if I can read news today. Like, this is cool, but I just, like, so stupid. 21 Pokemon. Japanese jewelry brand U Treasure added 21 Pokemon themed engagement and wedding ring collection. $1,700? Yeah, I'm good. I'm good. What's up, UG? Might have to get rid of the moderator, bro. If you're gonna be the only one typing in the chat. Just doesn't look good to only have a moderator typing. Might have to get rid of mods again. That sucks. But not much you can do, bro. People hate this stream, apparently. Fine by me. KHB really turned down $1 million to do sponsored crypto talk. What a boss. I have respect for Michael Brownlee for that. If you promote crypto, I mean, you probably don't know what you're talking about. IKEA serves liquor? Not where I live. You can't find liquor in stores where I live. It's illegal. It's illegal. Rip mod. Labubu's are getting their own movie? That's ridiculous. PlayStation to phase out PSN name in 2026. This chick's quitting streaming, maybe? Oh no, I guess not. Just a stupid post. Maybe I should pay for a Dexerto post. Probably wouldn't do anything. K-pop Demon Hunters reportedly getting a global concert. How? It's just gonna be AI. Like in, I don't know. Unless it's like the actual actors. What? Wow, Pringles promo goes awry as scalpers list event rewards for hundreds? Pringles? Oh, it's World of Warcraft. What's up, Grady? What's up, Ruben? Hope you guys are doing good. Yeah, not much news. Strive accumulates 13,600 Bitcoin. It's interesting, all the businesses that were buying Bitcoin at all-time highs. Now it's like very select few. Gotcha game apologized for giving players malware. What? Free-to-play gotcha RPG. Cybersecurity incident. What? That's weird. What? Pokemon Pokapia players are turning Machoke into their house husband. I'm sure they are. They want to get Machoked. What the hell is Pokapia anyway?
What the fuck?
Sleeping with Machoke.
I did not play off stream.
Okay. Okay. Tom Clancy's studio no longer making games. Tomb Raider Studios faces 4th round of layoffs. Isn't Tomb Raider Studios owned by Amazon? Pretty sure. Or at least they're making the new game. I thought it was gotcha. How can you make fun of me for all the things? You don't even know what a gotcha game is. That's funny. Gotcha game. I gotcha. Gotcha. Pokapia. What is Pokapia? I don't even know what that is. I know it's a new game, but like, yeah, I'll just watch gameplay, I guess. Even though I don't think that's a good idea.
Are you Marsha?
Pokemon, Animal Crossing, Minecraft. Oh.
Five-minute dip or a...
It doesn't look like I would enjoy playing this.
Most resembled a cart...
Doesn't look like it's for me. What is it, gotcha? I think it just means like a creature or something like that, but I don't know the actual definition. A game, typically a video game that implements the gachapon machine style mechanics. Whatever the fuck that is. On strategy, team building, synergizing, player improvisation. Strategy games such as Magic. Similar to loot boxes, live service gacha games entice players to spend in-game currency to receive random in-game items. Some in-game currency can be gained through gameplay and staying up to date and by purchasing. Well, there you go. It's basically just a video game because every game these days has some stupid microtransaction mechanics. Or like random things. So it's basically just every video game in the world today. New home sales are down a fuck ton. Yeah. Real estate was on a good path and up until this oil shit. Now it's clapped. Again. And it's probably going to be clapped again for another like year or two. Like, it's so dumb, bro. Like, don't they know I just want to sell my piece of shit house? Like, can't they get these economics going a little quicker? Counter-Strike 2 introduces the game's biggest shakeup. Now when reloading, you lose all the mag's remaining ammo. Well, that's kind of cool. There's just nothing, bro. There's just nothing to talk about. Good thing I started the stream late today. Because there's actually, like, nothing to talk about. Thomas the Tank Engine's being brutalized by Unreal Engine physics. What is this? Oh my god, that was fucking loud, bro. Good lord. Headphone users are cooked. I don't know what that is. Thomas and Friends Wonders of Sodor. Released on Steam this week. Wonders of Sodor casts Thomas and his troubling face peers in a train sim where players navigate the many duties of the Northwestern Railway. Punt these sentient train cars into the upper stratosphere. What? What is this called again? Wonders of Sodor? This is a $40 game just to fucking drive some trains. Damn, that's $40, bro. $40 for this? That's some fire gameplay right there. Playing some Thomas the Tank Engine, dude. Damn, that looks fire, dude. It's a steal. It's an absolute steal for $40. Had a buddy in high school ask me one time, why is the economy fucked? Why can't they just type it into a computer and fix it? he's a real one for that. I still don't know how to answer him. Because that's not how it works. Supply and demand. And it's not a computer. It's based off of real people and how the herd of, or I should just say the majority of people are approaching economics. And when oil triples, doubles in 2 weeks, that makes inflation go up really high. And that worries people because they can't differentiate like actual inflation versus like an event that made inflation go up a lot in a moment. So it makes people hesitant, and then they stop buying real estate or whatever it may be, and that's why you're seeing real estate act the way it is. But nah, I disagree. He's not a real one for that, because economics is literally just how people are feeling and how they are approaching the world. So I disagree. He's not a real one for that. He's actually the opposite for not understanding how economics works. So I don't know. I can't get behind that, bro. I can't get behind that. Very type into a computerable. When a bunch of airstrikes and a war is stopping ships that were bringing in millions, potentially hundreds of millions of dollars of oil into ports, and then that just stops. That's not type into a computer. That's a real world event making oil more expensive. So I just I can't get behind that. Can't get behind that. Yeah, there's no news, bro. There's no news. Complete Stranger Things DVD set. I mean, that would have been a cool thing if they didn't ruin the last season. Rivian will provide 50,000 robo-taxis to Uber in a deal worth $1.25 billion. Oh, that's kind of cool. How is Rivian doing? I haven't looked at that in a long time. They also do like Amazon vans as well. Damn, this thing has been flat for a long time. It's really not up that much. It's probably overpriced though. 20 billion market cap. There's no way. Ain't no way. It's probably overpriced. The fuck? God, my computer is so slow, dude. Come on. You can do it. What's going on, bro? Why is my computer being so shit? There we go. Bro. What the hell is going on, bro? Maybe it's just the SEC website. Gotta be the SEC website. Unless I don't think my internet's cooked. No. Oh, fuck off, dude. I just want to look at this. There we go. We'll look at it this way then. The difficult way. Where's your numbers, buddy? Where the heck? There it is. Let's see. So 15 billion assets. Ugh. I mean, it's not as overpriced as I thought it was gonna be. It's billion, right? Yeah. So 15 billion, 8 billion liabilities. They're kind of paying off their debt. No, they're not. Never mind. They paid off something. Lease liabilities went down, but non-current lease liabilities went up, so that doesn't matter. Accrued liabilities went down. Accounts payable went down. So actually not as bad as I thought it was going to be, but it's still a little overpriced potentially. They got oh, they lost 5 billion, or wait. Yeah, they're consistently losing a lot of money though. But they're losing less and less. They went from losing 5 billion to, or 5.5 billion to 4.7, now 3.6. So maybe one day they'll become profitable, but that ain't it, Chief. That ain't it, Chief. FBI confirms it's buying Americans' location data. Ugh. Gross. Amazon will reportedly cut its USPS shipments by 2/3. Interesting. Very interesting. Oh yeah, I forgot I started the stream late. When does this Planet Labs nonsense start? I don't even know what the hell this is. It's up 8% today. Holy. Whatever the hell this thing is up almost 10x the past year. So I expect it to be a relatively popular stock. How come we only have 1 like on the stream? That's wild, bro. That's wild. I can only give it 1. Well, thank you, bro. I don't like being that guy that has to tell people to like the video, but I don't know. What the hell is this? Is this the right business? Okie dokie. All right, that's that. Oh, there's no ad. That's weird. How did the Larry Nat video go? Actually did pretty well. I think the views are slowing down now, but it was one of the, not one of the best videos I posted, but for a while it was doing like really well. I haven't actually looked at it since last night. I appreciate this guy's comment. Does nobody appreciate good content? 13 hours and only one comment. Really good interview. Well, thanks to this guy. I mean, yeah, that's how it goes, bro. Everyone hates my channel. But yeah, it's doing alright. The views definitely slowed down, but it's still doing okay. It's because of the title, though. You know, if I would have just put Larry Chang Nat Turner interview, it wouldn't have did that well. But since I did Nat Turner buy GME GameStop stock, you know, that's a easy clickbait title. It's the only reason that video is doing relatively well. I need to start making those stupid shorts again. Like as soon as I deleted all those shorts of me like acting like an idiot on the earnings calls, my short videos like completely died. So I guess I'm kind of forced to make those videos potentially, which kind of sucks because I don't really enjoy making those videos, but they are very simple. So yeah, that's that. I don't really like looking at my analytics that much anymore. It's just kind of depressing, honestly. Even though like I should be happy that I get views at all. I'm just not. I'm just not, bro. I should be happy that I get like any views at all, but I'm not. It's I don't know. It's dumb because getting like any views at all is a challenge. But I've gotten to the point where I've been doing this so long that I know what videos will at least get like a couple hundred views. But it's just not enough, man. It's just not enough. Like, it's just not. PSA take debunked in 4K. YouTube drama creator? Nah, that doesn't get views. Because literally everyone and their mom is doing that. That's the issue with that type of content, is it just doesn't get views. Like, there's 1,000 people making videos like that. Nobody makes the content I make. The only way being a drama YouTuber would work is if I talk shit on people in the GameStop community, but I have no desire to even talk about any of those people. I mean, they're fucking losers, bro. They're fucking losers. I don't want to talk about them. There's not a single person in the GameStop community that I respect at all. Honestly, they all suck. Like, I'm just being honest. Like, they all suck. Maybe there's like a new creator or something that I don't know about, but I assume it's just all the same people, and they're all terrible. What was that retro console thing about? I saw something about like some GameStop tweet about retro consoles or something. I don't know if I can find it. Just have to use one of these articles, I guess. Let's see. GameStop today issued an official declaration that PS3, Xbox 360, and Nintendo Wii U are, for all practical purposes, officially retro consoles. The ruling was reached following careful analysis of multiple indicators, including the presence of component cables, the lack of Fortnite, and the realization that they launched when George W. Bush was president. Under GameStop's retro classification standard, the aforementioned systems will now join the ranks of the other beloved legacy hardware, such as Sega Saturn and DS. GameStop will run a retro trade-in bonus offer now through March 21st. Customers who bring in Wii U, Xbox 360, PS3, or any older consoles, games, or accessories will be rewarded an additional 10% trade-in credit. GameStop's pleased to announce stores now accept defective retro consoles on trade. Customers now may now trade in these historic artifacts even if they're non-operable, missing accessories, or aesthetically unfortunate. They just need to power on. GameStop would also like to remind the public that while these systems are now officially classified as retro, they're very cool, and anyone who owned one at launch is absolutely not old. Ah, fuck. Well, I'm old. I'm old. Yeah, I was talking about the bonus trade-in thing. I never read it. Absolutely not. I feel old, bro. I feel old. For only being 30. 2. I feel old. I don't feel like I should feel like this. Honestly. Well, that sucks. Nothing to talk about. GameStop's kind of been trash lately. But, I mean, this is probably around like what their assets will be at with market cap. Probably around this. So I guess the market's kind of pricing in what it's going to be. We'll see, though. It'll be nice to see some numbers, even though they're lagging and they're like 4 months old. It'll be nice to see some numbers, I suppose. Insider buy on Reddit, 1.3 billion. Got a Peak 6 13F. They sold 302,000 calls, 8,600 puts, and bought a brand new 36,000 share position. Save 15 bucks on Xbox controllers. I do need a new controller, but I think I'd get a PlayStation controller over an Xbox. Seems like Bitcoin dumping is going to cause GME to miss on earnings. Definitely not. I don't think Bitcoin dumping matters. I don't think that affects anything. I don't even think it counts as towards net income, so I don't think that's going to be a thing. Digital asset is its own thing. Counting procedures that gains losses on Bitcoin gets reported as net income. I don't think so. Pretty sure it's calculated on its own thing. And we can look, but I don't think it does. Even if it does, who cares? Honestly, I'd be happy if they missed earnings and the stock went down. That'd be pretty hype. But it's still irrelevant. Might affect on index. I don't know what you mean by that. I mean, you just have to add up the numbers here. So you do 276. I'm just gonna round, plus 5, plus 44, plus 42, plus 20, plus 15, 402. Yeah, maybe it does. Either way, I don't think it matters. Oh wait, minus 216. I must have missed something. I don't know what I missed, but either way, I don't think it matters. Maybe it does. I think MSTR would be a better example, probably. don't know that it does. Because it's unrealized. Like, it has nothing to do with income. If it was realized, sure. Need something with more simple numbers, but can't find it. Do these guys not have? Yeah, that's the wrong business to be analyzing for simplicity. I don't know. Whatever, we'll figure it. We'll find out when it gets released. But either way, it doesn't matter. Might matter to someone, but not me. Hopefully they just sold the Bitcoin, because crypto's fucking garbage. Market closes here in a minute. Alright, later, Hugh G. Have a good one, bro. Alright, there's the market close. Bitcoin falls under fair value accounting rules, trying to find a source. I mean, it could, but it's unrealized gains and losses, so I don't see why that would count towards income. If it was realized, sure. But unrealized, I don't know about that. We'll find out. Going up to 30, I don't care. I don't care if it goes to 30 or not. If you're stressing about a difference between $27 and 30, you're probably not in this investment for the right reason. You're probably just gambling on options, but you're asking the wrong person if you think I'd care where this stock goes. It's unique to Bitcoin because Bitcoin's property, not an investment. Still, unrealized gains. If you had unrealized gains in real estate, I don't think that would be. I don't know. Like I said, I mean, the earnings are on Tuesday, so I don't think it really matters. We'll find out soon enough. Oops. Still waiting. There you go. It's got to be out. Down 7%. Holy guacamole. Should I make a clip? Should I make a clip real quick? Oh my gosh, Planet Labs is down 8%, dude. Oh, bro, I shouldn't have bet on calls. Should have bet on puts, bro. Crazy. What a dumb. Those stream clips are so dumb, bro. They're so dumb. Whoops. All right, where's this earnings report? They haven't dropped it on their website yet. Oh, there it is. There she goes. All right, Planet reports financial results for fourth quarter and full fiscal year 2026. Delivered record annual revenue of $308 million. Increased RPOs plus 106% year over year to $852 million. Backlog 79% year over year to over $900 million. Generated $134 million of net cash provided by operating activities and $53 million free cash flow in fiscal year 2026. End of period cash and cash equivalents and short-term investments increased 188% year over year to $640 million. How is this at a $9 billion market cap, bro? This thing seems garbage. I don't get how this is at a $9 billion market cap. Doesn't seem good at all. Let's see. Planet had a transformational year driven by strong momentum in satellite services, including most recently with Sweden, as well as launching 40 satellites and inking an R&D partnership with Google to explore data centers in space. Wow, data centers in space, bro. So cool. That's so cool, dude. Puts, bro. That's so cool. Data centers in space? Wow. Wow. Please update gallery stills location and project settings. Current location is offline. What? The hell is that? We delivered record revenue with Q4 growing 41% year on year and ended the year with $900 million of backlog, representing 79% growth year on year. With this excellent backlog as well as our healthy pipeline, we project strong growth for this year and beyond. Consequently, we're leaning in and investing in the huge market opportunity in front of us. Just as satellite services were transformative last year, we expect AI to be transformative this year, enabling us to unlock massive markets even faster. And all we're playing to win. Oh, you and everyone else, buddy. You and everyone else are jumping on the AI train, bro. Who isn't on the AI train these days? Honestly, it's like not even cool anymore. Like everyone's just an AI addict. Like AI, it's the best investment ever. When it's probably not. It's just probably not. Maybe, but probably not. Let's see. Ashley Johnson, Planet President, Chief Financial Officer. One sec, I'm doing something. Okay. Why is this guy pumping a bio stock in my chat? That's crazy. Nobody likes biotechs except degenerate gamblers. Any real investor isn't buying a biotech stock. All right. We delivered record revenue, our first fiscal year of adjusted EBITDA and free cash flow profitability, and closed the year with $640 million of cash equivalents, and short-term investments. Achieving these major milestones is a direct reflection of the hard work and dedication of our global teams. Their unwavering commitment to delivering innovative solutions and exceptional value for our customers has strengthened our financial foundation and positioned us for sustainable, profitable growth. Okay. They beat on top and bottom. Yeah, that doesn't matter. The stock's overpriced. Doesn't matter if they beat. The stock's overpriced as fuck for this tiny ass business. See, fourth quarter revenue increased 41% year over year to a record $86.8 million. Full year revenue increased 26% year over year to a record $307.7 million. Percent of recurring annual contract value was 98% as the end of fiscal year 2026. Fourth quarter gross margin was 54% compared to 62% in the fourth quarter of fiscal year 2025. Fourth quarter non-GAAP gross margin was 57% compared to 65% in the fourth quarter of fiscal year 2025. Full year gross margin was 56% compared to 57% in fiscal year 2025. Full year non-GAAP gross margin was 59% compared to 60% in fiscal year 2025. Fourth quarter net loss was $152.5 million compared to $35.2 million in the fourth quarter of fiscal year 2025. Fourth quarter of fiscal year 2026 net loss included an approximate $122.6 million revaluation loss from the change in fair value of warrant liabilities related to stock price appreciation during the period. Full year net loss was $246.9 million compared to $123.2 million in fiscal year 2025. Full year net loss included an approximate $161.4 million revaluation loss from the change in fair value of warrant liabilities during the fiscal year 2026 related to stock price appreciation during the period. Fourth quarter adjusted EBITDA profit was $2.3 million compared to $2.4 million in the fourth quarter of fiscal year 2025. Full year adjusted EBITDA profit was $15.5 million compared to a $10.6 million loss in fiscal year 2025. Fourth quarter GAAP net loss per share was 0.48 and non-GAAP net loss per share was 0.0. Fourth quarter GAAP net loss per share included an approximate 0.39 impact from change in fair value of warrant liabilities related to stock price appreciation during the period. Full year GAAP net loss per share was 0.8 and non-GAAP net loss per share was 0.04. Full year GAAP net loss per share included an approximate 0.52 impact from change in fair value of warrant liabilities related to stock appreciation during the period. Full year net cash provided by operating activities was $134.4 million, and full year free cash flow was $52.9 million. End of the quarter was $640.1 million in cash, cash equivalents, and short-term investments. Growing customer and partner relationships. Swedish Armed Forces. During the quarter, Planet was awarded a multi-year low nine-figure agreement by Sweden to rapidly deliver a suite of satellites, space-based data, and awareness solutions to support countries' peace and security operations. This agreement marked Planet's third satellite services contract in 12 months. U.S. Defense Innovation Unit. DIU awarded Planet a seven-figure extension of its pilot in support of the U.S. Indo-Pacific Command, which is designed to deliver vital indications and warnings. The short-term contract demonstrates how customers can leverage Planet data and AI-powered analytics to monitor sites of strategic interest for critical changes and threats. U.S. Defense Innovation Unit. DIU also exercised an option during the quarter under its existing hybrid space architecture pilot with Planet for just under $1 million. The short-term contract is to demonstrate the cutting-edge capabilities of Planet's next-generation high-resolution Pelican satellites. NATO. During the quarter, Allied Command Transformation, NATO Strategic Warfare Development Command, maintained its selection of Planet to deliver persistent space-based surveillance and enhance indications and warning capabilities. The seven-figure agreement reinforces NATO's commitment to maintaining a technological edge through advanced daily monitoring. The contract extension underscores Planet's position as a trusted and essential partner for customers seeking to bolster their strategic capabilities. German Federal Agency of Cartography and Geodesy. During the quarter, Planet was awarded a seven-figure renewal and expansion by BKG. Under the renewal, BKG will continue its countrywide partnership through which employees of more than 400 German federal institutions can gain access to Planet's data to help promote public and civil safety throughout the entire Federal Republic of Germany. BKG has expanded its access to track permafrost thawing across the Arctic. Slovenia. In January, Planet announced an enterprise-scale agreement with Surveying and Mapping Authority of the Republic of Slovenia to provide comprehensive satellite data and high-resolution tasking capabilities across the country's civil public administration in support of agriculture, urban planning, and disaster management. SHIELD IDIQ. The U.S. Department of War's Missile Defense Agency selected Planet as a prime contractor for scalable Homeland Innovative Enterprise Layered Defense, indefinite delivery and indefinite quantity contract vehicle. Planet will now compete for awards under this program. San Diego Gas and Electric. During the quarter, Planet was awarded a 3-year renewal by SDG&E through its long-term relationship with Planet. SDG&E has pioneered the integration of Planet's high-cadence satellite data directly into its wildfire risk models and operational decision-making, paying dividends as the organization navigates increasingly dynamic climate and vegetation conditions across Southern California. AI Dash. During the quarter, Planet signed a strategic partnership with AI Dash, becoming the preferred provider of daily and weekly fuel monitoring data for utility wildfire risk mitigation across North America. Partnership is already generating commercial traction. Leading investor-owned utilities are actively using Planet's data to identify where and when to deploy fuel treatment resources, reducing ignition risk, and targeting high-priority clearance with precision that was not previously possible. For the first quarter of fiscal year 2027, ending April 30th, 2026, Planet expects revenue to be in the range of approximately $87 million to $91 million. Non-GAAP gross margin is expected to be in the range of approximately 49% to 51%. Adjusted EBITDA loss is expected to be in the range of approximately $6 million to $3 million for the quarter. Capital expenditures are expected to be in the range of approximately $17 million and $23 million for the quarter. For the full fiscal year 2027, Planet expects revenue to be in the range of approximately $415 million to $440 million. Non-GAAP gross margin is expected to be in the range of approximately 50% to 52%. Adjusted EBITDA profit is expected to be in the range of approximately $0 to $10 million. Capital expenditures are expected to be in the range of approximately $80 million and $95 million for the year. Planet has not reconciled its non-GAAP financial outlook to the most directly comparable GAAP measures because certain reconciling items, such as stock-based compensation expenses, change in fair value of warrant liabilities, and depreciation and amortization are uncertain or out of Planet's control and cannot be reasonably predicted. The actual amount of these expenses during the first quarter of fiscal year 2027 and full fiscal year 2027 will have a significant impact on Planet's future GAAP financial results. Accordingly, a reconciliation of Planet's non-GAAP outlook to the most comparable GAAP measures is not available without unreasonable efforts. Okay. Oh, the stock's up now. Interesting. People love buying overvalued stocks, I guess. It's working. It's up 10x in a year. It's working. Am I mad? Why would I be mad? Why you think I care about this? Why would I be mad? The only people who care about stocks like this are degenerate gamblers. So why would I be mad? Congratulations, you made money. How many stock trades have you lost? How many stock trades have you lost after you finally won? Good job, buddy. Good job. Just having fun? Well, being a fucking loser isn't having fun. Talking shit in some random live stream to someone you don't even know. That's not having fun. You're just kind of a bitch. So I guess if being a little bitch is having fun, I mean, I wouldn't be surprised. I wouldn't be surprised. Alright, well, you can be banned, bro. You both can be banned. How about that? You want to say I'm a crybaby because I don't like being talked shit to by some loser in my chat? I mean, you can go fuck yourself. Here, you can be banned too. Bunch of brokies who finally won an option trade and they think they're cool. Congratulations. Congratulations, you guys won an option trade. Wow. Good job. Fucking losers. What's up, Kenny? Hope I'm doing great. I'm doing alright. I'm doing alright. Got shares at 12 last year, holding this for the long term. Nice. People buying this shit at all-time highs. Oh yeah, they think they're geniuses. The stock was down 8% when they first reported and everyone was crying. But now that it's up, everyone's a fucking genius and they gotta talk shit. It's interesting how that works. Interesting how that works. What's up, Rosh? How you doing, bro? Stranger gamblers. That's right. Degenerate gamblers. It's funny how, like, people in the chat, they talk shit to me, but as soon as I start talking shit back, I'm the bad guy. Like, it's weird how that works. It's weird how that works. Fucking keyboard warriors, bro. Keyboard warriors. Bought some GME because that's the strat. I wish I had money to buy GME. That'd be cool. I'm about to go refi my house or some shit. Get 100K real quick. On God. If it's even possible. Still got way less than you. I mean, but buying consistently is dope. Having consistent income's dope. Having a bunch of shares and no income is honestly just kind of annoying, if I'm just being straight up. It's like when your account is swinging like $10,000-$20,000 a day, and you literally make no money. It's like, fuck. Should probably be taking profits. It's so stupid, bro. It's so stupid. But taking profits is whack. I mean, you know, obviously taking profits is really important, but it's just not the play. The play is long. Looking at anything else to be added to your long term? Nah. There's no other good businesses. Everything else is overvalued. I mean, there's a you can find some stuff, but it's not going to be any like mainstream names. But nah, if it's not GameStop, I'm not interested. It's the only stock slash business I think will, well, in the moment is fairly valued, and in the future has a lot of potential and very minimal risk. I don't. There's nothing else like it. There's no other business. You can buy a bunch of overvalued dog shit that will probably do well, but or you can find something that's not overvalued and it's probably not a good business. But I'm not interested in investing in anything else, honestly. There's a lot of good trades. Don't get me wrong, there's a ton of good trades if you're looking short term, but long term, I don't see anything else worth my time. If I remember right, Lyft is like fairly valued, but the business is failing, if I remember correctly. I don't know. Let's see. 5.3 billion. Oh no, they made 2.8 billion last year. Okay. So they're doing pretty good. Yeah, Lyft is potentially undervalued. Well, not undervalued, but fairly valued. Somewhat. Last time I looked at it, I don't think it was as good as it is now. Kind of interesting though. I would never buy it, but not bad. And the other two, I don't even know what HNST is. The Honest Company, that's too small. 300 million market cap. That's a baby company, bro. I can't get behind that one. Can't get behind that one. Wait. Whoops. When? I don't know what that is either. Oh, Wendy's. I think isn't Wendy's failing? I know it's like a consistently good, profitable business, but I think it's not doing well. I don't know. I don't really want to look it up right now. But out of any of those, Lyft is probably. I mean, maybe Wendy's is interesting. I just don't want to look into it. Yeah, I'll look into it. We got 30 minutes to kill. What was the market cap? Wendy's. 1.3 billion? What the hell? That seems very low, doesn't it? Ah. their income's falling. Yeah, there's something sus there. They got too much debt. Too much debt. Something sus there. Makes sense why it's so undervalued. Too much debt. Who knows though? Maybe they can turn it around. If they can turn it around and get rid of that debt and get some more stockholder equity, it wouldn't be that bad, but it's potentially risky. Yeah, GameStop's the only one, bro. I mean, even GameStop is technically a little bit overvalued. Like, if you're talking, like, potentially it's a little overvalued. Not by much, but potentially. But, you know, huge difference is every dollar GameStop makes, it goes back to the balance sheet. No, that doesn't go to paying off debt or anything like that. The only debt they have are the senior notes, which technically really isn't debt in a lot of ways. So there's just no business like that, man. Every other business has like so much risk. And then, you know, things like this Planet Lab shit. Sure, you know, the stock's up 10x in a year, but this is a trash business, so it's like, how long is that actually gonna last? If you're looking out like 5-10 years, is this thing actually gonna work out? Like, I don't know. I don't know. It's tough to see a business and like look and try to like build a story of like what 5-10 years looks like. It's kind of easy with GameStop. It's kind of easy. How about Airbnb? Airbnb is a interesting business, but the stock's overvalued. Potentially. I don't really want to look into Airbnb. We did Airbnb earnings. We did a stream about Airbnb earnings. It's a good business, but just, I don't know. Just depends on your investment strategy. Like, you gotta build the narrative for yourself. Like, I can't build it for you, honestly. I mean, I probably could, but I don't know, like, what your time horizon is or anything like that. You know, there's a lot of factors that go into it. GameStop, I plan on holding it basically forever and never selling. Like, I don't know if there's a single other thing on the market that I could have that same view for. But nah, real estate's fucked. At least in the US. It's fucked for another like 2 years. It was on the verge of like coming back and being good, but they fucked it with the war and oil going up that much, and also with the market selling off, all in the same. Yeah, they fucked real estate. Real estate's fucked, honestly. Like, it's screwed. Real estate will always be a steady investment and will probably always go up over time, but for the next like 5 years, maybe 3, real estate's cooked. At least in the US. I can't speak for other countries. Good time to buy a house, though, if you have money. If you have money, it's probably the best time ever to buy a house within the next like year or two. You could probably get a really good deal. But other than that, it's fucked. Oh. We'll be stagnant. Yeah. It might even go down, like, honestly. What I could get for at my house like a month ago, like, I I don't know, man. I just think real estate's cooked. I think it's cooked. Passed the housing bill in the Senate, I believe, but it hasn't gone all the way through, and it probably won't. But I don't think that's gonna matter much. From yeah, they'll change a bunch of stuff before it actually goes through, but from the little bit I've read, I don't think it'll have a huge impact. But it's definitely a factor. Personally, I'd rather have a person buy my house anyway than an institution. You actually be able to get a good deal. Institution's just going to try to rip you off, most likely. And the stock's up a lot. It's up quite a bit. Ah, don't drop the Michael Burry emote, bro. Don't do it. He got my ass, bro. He got my ass. He got my ass, bro. Michael Burry proved he's a better investor than me. I'll admit defeat. I'll admit defeat. I think you'd do great in becoming a collector / card grader. I don't want to collect. I already know I could do that. Like, that's how a lot of my life has been, like, flipping items and buying and selling and stuff. Like, I know I can do that, but I don't want to be a collector. I don't want to buy cards. I sold all my cards. Every single one. Well, I have a couple decks for like actually playing the game, but I can never become a grader. I never looked into that. I don't know if it's something I'd want to do though. I also don't know how you'd get in it because I just Googled it and it didn't even pop up. Like, it seems like it'd be a potentially high demand job, but you'd have to move to wherever PSA is located, most likely. I think there would just be a lot of things. Would be interesting though. Damn, this thing's up 11% now. Ripping. Seemed interested. I thought that'd be cool. Yeah, it'd be cool. Just a lot of unknowns, I suppose. And if it's just like any normal job and you're only getting paid like, even if you're getting paid like 30 bucks an hour or something, like, is it actually worth all the effort and time? It's just highly debatable. I don't know. Highly debatable. Would have to research more. But I don't know that it's something I'd even want to do, honestly. Damn, this thing is ripping, bro. Crazy how, like, overvalued stocks like this can continue to just absolutely crush. Especially in the middle of, like, a market downturn. Like, the market's doing terrible, but this random, like, not even good company is just, the stock's just absolutely crushing. Like, it's just so weird. Market doesn't make any sense. Only if you enjoy it, but if not, then forget it. Yeah, I don't know that I would enjoy it. I'm sure it'd be cool, but like for like a career to do like forever, I don't know, man. Surprised there's not more people here. You'd think a stock like this would be more popular. A lot of degenerate gamblers out there. They love buying things like this. But not that many people in the stream. Kind of surprised. Unless there's another person streaming this, which is definitely possible. I don't think anyone's even streaming it. I guess it's just not. Yeah, I guess just nobody's paying attention to this one, which is very surprising. Very surprising. Thinking it'd be a side type of career and freelance if you get really good and make a thing of it. Remember, like for that show Pawn Stars, they'd call up their professional. Sort of suck if you stuck in a cubicle following orders to grade. Yeah, I'm not really looking for like a side thing either, you know? I'm gonna put effort into doing anything else. It's gotta be something I'm gonna do forever. Done enough side things. Holy shit, man. This is up a fuck ton, bro. And honestly, like how long is like collectibles and stuff gonna be as popular as it is? You know, is it just a phase, or is it something that's gonna last forever? You know, if it's just a phase, going through all that effort to become like a grader, it's just not gonna be worth it. You know, if it, of course, you know, it's gonna last forever, but like, is it gonna be as in demand as it is now? I think that's highly debatable. I'm gonna hit the gym. All right, bro. Enjoy it. Enjoy it, bro. Enjoy that gym. Get in there. Get on that cardio bike. This stock is ripping, dude. Up 19%. Holy. Holy. Thank you, Ruben. The call starts in like 10 minutes, so. Dude, this thing is ripping. How is there not more people in this stream right now? This is like one of the few stocks that is just absolutely crushing. And nobody cares. Like that's interesting. That's interesting. There should be like 1,000 people in this stream. Holy shit, 24%? Oh my. Oh my. Oh my. I'm gonna have to do another stream clip here for how much this is up. Dude, Planet Lab is up 25%, bro. Oh, I shouldn't have bet all my money on puts, dude. This is not good. 26%? Stop! Stop! Good lord, man. Good lord. It's up so much. 2 stream clips? I've never posted 2 stream clips at once. I wonder how that would do. It'd be kind of interesting. I would say stick with streaming first. Keep turning me down every time I say it, but I think you just keep at it. It's just hard to make a living streaming, bro. It's hard to make a living on YouTube. That's the only issue. if I was making as much money on YouTube as I was like a year ago, you know, I wouldn't be so negative about it. But man, they made it hard. They made it hard to make money on YouTube. 6%, stop. They made it difficult. I would love to do this forever, you know. This is something I could actually do forever and be like okay with it. But it's just hard to make a living doing this, you know. The 0.0001% chance that you can make a living doing what I'm doing. It's like the odds are just not in your favor. It's not like Hunger Games. May the odds be forever in your favor. I wish I had enough like DP. I'd be throwing some at you too soon though. Oh, you're good, bro. You're good. Double prizes is a. God bless that guy, bro. God bless that guy. If it wasn't for him, I would have honestly had to quit a long time ago. And you know, there's a lot of members and stuff too. Like I don't make a ton off memberships, but everything helps, you know. Who knows, maybe a year or two from now, I'll look back and wonder why I even thought about quitting. You never know, I guess. That's the risk. Or I'll be in the exact same spot and wonder why I didn't quit. That's the risk. It's either going to work out and it's going to bring success I never even thought was possible, or, you know, I'm just going to be literally in the same exact spot in like a couple years. Maybe a little richer from the GameStop investment. Maybe a tiny bit, little more, but I don't know. I hope the stream grows, bro. I hope so. As of late, it's only been declining. So, It's in the moment it's tough to see. It's tough to see the positive outcome. Especially when, like, last month I put in probably more effort than I've ever put in, and it only got worse. Like, that sucks. That sucks. Try to leave GME out of the title and compare results would be funny. Yeah, that'd be interesting. Maybe, I don't know. I bet you're shadow banned. Oh yeah, for sure. You type my name in the YouTube search, it doesn't pop up. I'm hella shadow banned. Like, it doesn't show up, bro. Like, it sucks. You type in anyone else, it shows up, but not me. It's crazy when I couldn't type in the chat. Yeah, that's weird. Very weird. This earnings call should be starting any minute now. I could leave GameStop out of the title, but that's where a lot of the views come from, honestly. Like, it's such a popular stock. People type it in Google or into YouTube all the time. It's one of the most searched stocks, I believe. So it's just an easy way to get traffic, even though nobody ever sticks around. Yeah, we could try it. I already know the outcome. I look at my analytics not as much lately, but I look at my analytics very frequently, and yeah, that's where a lot of the traffic comes from.
Thank you for joining us, and welcome to Planet
All right.
Labs PVC
Enjoy.
fiscal fourth quarter and full year 2026 earnings call. After today's prepared remarks, we will host a question and answer session. If you would like to ask a question, please press *1 on your telephone keypad. I will now hand the conference over to Cleo Palmer-Porner, Director of Investor Relations. Please go ahead.
Thanks, operator, and hello, everyone. Welcome to Planet's fiscal fourth quarter and full year 2026 earnings call. I'm joined by Will Marshall and Ashley Johnson, who will provide a recap of our results and discuss our current outlook. We encourage everyone to please reference the earnings press release and earnings update presentation for today's call, which are available on our investor relations website. Before we begin, we'd like to remind everyone that we will make forward-looking statements related to future events or our financial outlook. Any forward-looking statements are based on management's current outlook, plans, estimates, expectations, and projections. The inclusion of such forward-looking information should not be regarded as a representation by Planet that future plans, estimates, or expectations will be achieved. Such forward-looking statements are subject to various risks and uncertainties and assumptions as detailed in our SEC filings, which can be found at www.sec.gov. Our actual results or performance may differ materially from those indicated by such forward-looking statements, and we undertake no responsibility to update such forward-looking statements to reflect events or circumstances after the date on which the statement is made or to reflect the occurrence of unanticipated events. During the call, we will also discuss historic and forward-looking non-GAAP financial measures. We use these non-GAAP financial measures for financial and operational decision-making and as a means to evaluate period-to-period comparisons. We believe that these measures provide useful information about operating results, enhance the overall understanding of past financial performance and future prospects, and allow for greater transparency with respect to key metrics used by management in its financial and operational decision-making. For more information on the non-GAAP financial measures, please see the reconciliation tables provided in our press release issued earlier today, which is available on our website at investors.planet.com. Further, throughout this call, we will provide a number of key performance indicators used by management and often used by competitors in our industry. These and other key performance indicators are discussed in more detail in our press release and our earnings update presentation, which are intended to accompany our prepared remarks. At this point, I'd now like to turn the call over to Will Marshall, Planet's CEO, chairperson, and co-founder. Over to you, Will.
Thanks, Cleo, and welcome everyone joining us today. Last year was transformational for Planet, and I'm proud of everything that our team accomplished. We made incredible progress in the satellite services market, signing a €240 million agreement funded by Germany and a 9-figure deal with Sweden, capping off 3 such deals in 12 months. We launched 40 satellites, including 4 of our high-resolution Pelican satellites, invested strongly in AI, and announced a cutting-edge partnership with Google to demonstrate satellites for compute in space. We delivered record annual revenue, adjusted EBITDA profitability, positive free cash flow, and accelerated our revenue growth. And we laid out a strong foundation for the year ahead, enabling us to continue that growth acceleration. So let's dive in. To briefly summarize the full year results, we generated a record $308 million in revenue, representing approximately 26% year-over-year growth. Non-GAAP gross margin was 59% for the year. Adjusted EBITDA profit came in at $15.5 million, and free cash flow was $53 million, representing our first full fiscal year of non-GAAP profitability, an excellent milestone for the team as we strike a balance between profit and growth. Q4 was also a record for revenue, representing 41% year-over-year growth, and our 5th consecutive quarter of adjusted EBITDA profitability. For the second sequential quarter, we achieved Rule of 40, which is our revenue growth plus adjusted EBITDA margin, and on an annual basis, we achieved Rule of 30, a full year earlier than we anticipated. End-of-period backlog was over $900 million, approximately 79% growth year-on-year, providing us with excellent visibility to accelerating our revenue growth for the coming fiscal year. Defense and intelligence was a major area of strength for us in FY26, underpinned by global dynamics. Full-year D&I revenue grew over 50% year-on-year, driven by strong performance in our data subscriptions, solutions, and satellite services. To recap our role here, Planet was founded on a core mission of making information about our world visible, accessible, and actionable to help both sustainability and security globally. As the geopolitical landscape shifts, security is an urgent mandate for governments worldwide, and our customers face mission-critical decisions in an increasingly complex and chaotic world, and this mission is critical to them. We view security as inextricably linked to sustainability. Resource scarcity and climate disasters are not just environmental issues. They are direct threat multipliers or even triggers for conflict. The defense and intelligence sector is essential to realizing our mission. Our customers rely on us to help identify unknown unknowns, detect changes, and warning signals that they didn't know to look for before they escalate into crisis. It's a critical part of our purpose. To highlight a few recent customer wins in this area, during the quarter, we received 2 awards from the U.S. Defense Innovation Unit. We were awarded a 7-figure extension of our pilot in support of Indo-Pacific Command to deliver vital indications and warnings. The short-term contract demonstrates how customers can leverage Planet data and AI-powered analytics to monitor sites of strategic interest for critical changes and threats. DIU also exercised an option under the existing hybrid space architecture pilot with Planet for just under $1 million to demonstrate the cutting-edge capabilities for our high-resolution Pelican satellites. During the quarter, NATO's Allied Command Transformation also extended its agreement with Planet to deliver persistent space-based surveillance and enhanced indications and warning capabilities. The award underscores Planet's position as a trusted and essential partner for customers seeking strategic indications and warnings across broad domains. Finally, last month, the US Missile Defense Agency selected Planet as a prime contractor for the SHIELD IDIQ contract vehicle. Planet will now compete for awards under that program. Turning to the civil government sector, where full-year revenue was flat year-over-year, to share some recent highlights, during the quarter, Planet was awarded a seven-figure renewal and expansion by the German Federal Agency for Cartography and Geodesy, or BKG. Under the one-year renewal, BKG will continue its countrywide partnership through which employees of more than 400 German federal institutions gain access to Planet's data and solutions for a wide variety of uses. As an example, this expansion will allow BKG to track permafrost thawing across the Arctic. In January, we announced an enterprise-scale agreement with Slovenia's Surveying and Mapping Authority to provide comprehensive satellite data and high-resolution tasking capabilities across the country's civil public administration in support of agriculture, urban planning, and disaster management. Shifting to the commercial sector, where annual revenue was down year-on-year. While this trend was expected given our increased focus on large government customers and the headwinds in agriculture, we remain confident in the commercial sector as a significant market opportunity for Planet, especially as we continue to advance our AI-enabled solutions. To share a few customer highlights from the quarter, specifically around our work in energy, we were awarded a renewal by San Diego Gas and Electric, which utilizes Planet data and analytics to monitor vegetation health and conditions within their service areas to manage risk of wildfires during the dry season. We also signed a strategic partnership with AI Dash, establishing Planet as the preferred provider of daily and weekly fuel monitoring data for utility wildfire risk mitigation across North America. Through the partnership, leading investor-owned utilities are already using Planet data to identify where and when to deploy fuel treatment resources, reducing ignition risk and targeting high-priority clearance with precision that was not previously possible. Turning to our satellite services business, in January we announced a nine-figure multi-year deal with the Swedish Armed Forces to rapidly deliver a suite of satellites, space-based data and solutions to support Sweden's peace and security operations. In terms of our existing contracts for satellite services, our teams are continuing to execute well. We are progressing with the builds for our contract with JSAT and beginning to serve dedicated capacity under the German-funded contract. We're continuing to find that our satellite services contracts are a win-win-win. The customer guarantees their sovereign space capabilities in their desired area of interest. Our other clients will benefit from increased capacity and revisit rates in the rest of the world, and Planet receives capital to forward fund our fleet build-outs. They also bolster our data and solutions offerings as countries want both speed and scale of our data and solutions and the sovereignty of our satellite services technology. Through our AI-enabled solutions, we accelerate time to value, become more deeply embedded in our customer operations, and gain more direct visibility to our customers' operational needs. We're leaning into these synergies across our product offerings. We're continuing to see robust demand from around the world for satellite services, driven by the current geopolitical landscape and the demand for sovereign space systems. Our competitive edge here is twofold. Firstly, our proven track record, having launched over 650 Earth imaging satellites, by far the most of any commercial company. Our second is speed. We are able to launch the first satellites within a few months of contract signing, as shown with the partnership funded by Germany, far faster than traditional aerospace. The demand is significant and reflected in our pipeline, which has grown appreciably in both number of deals and average deal size since we spoke about this at our Investor Day in October. We're leaning into this demand by expanding our manufacturing capacity in San Francisco and building out our second manufacturing location in Berlin. On the solutions side, I'm pleased to report that our integration of Bedrock Research is going very well. The team is helping us scale rapidly and deliver AI-based solutions, notably standing up 600 new monitoring sites within 3 hours compared to a weeks-long process when we first launched the service. This deep domain area expertise, paired with our ongoing advancements in AI, have allowed us to expand the number of sites we're monitoring around the world, drastically reduce the time needed to implement, and enable our customers to scale across broader geographic areas. During the quarter, Planet expanded its technology collaboration with NVIDIA on multiple fronts. With Planet's proprietary dataset and NVIDIA's compute, we can enable significant new capabilities. This includes exploring the use of NVIDIA's accelerated GPU-based computing platform for Planet data processing, enabling faster, more efficient processing for all of our customers. Testing NVIDIA's new Thor processor for in-space use, enhancing super resolution and other AI processing capabilities, and more. As announced earlier this week, we're collaborating to build the world's first scaled GPU-native AI engine for satellite data and drive huge advances in efficiency and latency. More generally, we anticipate that AI will be transformational to our business this year. Let me give a bit of broader context. While LLMs offer users the incredible ability to have conversations with the text of the internet, they know very little about the physical world. Real-world models need real-world data, and Planet has it. Our deep data archive, averaging over 3,000 collections for every point on the Earth's landmass, represents a treasure trove of indexing the physical world and training next-generation models. As Wikipedia was the foundation data set for LLMs, we believe that Planet's daily scan is foundational to real-world models. Furthermore, AI itself is commoditizing software development, making data the key differentiation in AI. And why does this matter? Because it has the potential to unlock a huge market. While Planet is currently seeing tremendous traction for AI-based solutions in defense and intelligence, these developments are making broader area monitoring scalable and accessible for other applications and sectors. Ultimately, we believe this will result in generic applications, democratizing access to Earth intelligence and unlocking markets far faster. Specifically, we think that more generic AI solutions will soon empower non-technical users to go from a concept to a bespoke application in under an hour. We expect expanding these capabilities will benefit our current customers and drive new opportunities in markets such as agriculture, insurance, energy, supply chain, and finance. For the year ahead, our top priorities are executing against our current contracts across both data and solutions and satellite services, and scaling up to capture the massive opportunity before us. We see strong demand, so investing into our growth, including the technology roadmap. We're doubling our satellite manufacturing capacity. We're scaling our Pelican fleet with multiple launches scheduled this year. We're launching demos of our Owl and Suncatcher spacecraft. And we're investing in AI for existing solutions and the aforementioned more generic capabilities. In sum, last year we saw the start of returns on our investments into satellite services. This year, we expect to see the start of returns into our investments in AI. We sit uniquely at the intersection of space and AI revolutions, and Planet is the first space and AI company. By year's end, we believe Planet's Earth Intelligence platform will deliver transformational global impact as our customers leverage space and AI to transform data into action. We're leaning in to meet the moment, and we're playing to win. With that, I'll turn it over to Ashley to discuss our financials. Over to you, Ash.
Thanks, Will. It was indeed a fantastic year, underpinned by strong execution and key wins in satellite services. I'd like now to cover the results in more detail. Revenue for the fourth quarter came in at a record $86.8 million, representing approximately 41% year-over-year growth. Full-year revenue was $307.7 million, representing approximately 26% year-over-year growth. The outperformance in the quarter was driven primarily by strong usage from our defense and intelligence and civil government customers, as well as new wins that came in during the quarter. During fiscal 2026, our defense and intelligence sector revenue grew more than 50% year-on-year. The commercial sector was down modestly year-on-year, and the civil government revenue was flat, driven in large part by the end of our contract with Norway for their NICFI program. Turning to our regional revenue breakdown, growth was distributed across the globe in fiscal 26, with approximate revenue growth of 41% year-over-year in Asia-Pacific, 48% in EMEA, 11% in North America, and down about 2% in Latin America. As of the end of fiscal year 26, our end-of-period customer count was 897 customers, slightly down on a sequential basis, reflecting our direct sales team's intentional shift to focus on large customer opportunities and leveraging our self-serve platform to provide access to our data for other customers. As a reminder, Planet Insight Platform customers are not included in our end-of-period customer count. Given our focus on larger customers and the shift to a self-service model for the long tail of the market, we believe this metric has become less useful for investors and is not proactively monitored by management. We believe our retention rates on ACV are far more constructive measures of our business health and opportunity. Therefore, we plan to discontinue this metric beginning with the first quarter of fiscal year 27. We continue to see strong revenue growth and thus a solid increase in average revenue per customer as a positive indicator that our sales team's focus on landing and expanding high-value accounts is yielding results. As we shift to some of our ACV metrics, I want to remind you that our satellite services contracts are not included in ACV, although they are included in our RPOs and backlog, which we will discuss in a moment. Recurring ACV was 98% of our end-of-period ACV book of business, reflecting our continued focus on selling subscription data contracts and solutions as opposed to one-time professional or engineering services. Approximately 85% of our end-of-period ACV book of business consists of annual or multi-year contracts, lower than prior periods as we have seen a higher proportion of large, shorter-term government contracts signed in recent quarters. Net dollar retention rate at the end of fiscal year 26 was 116%, and net dollar retention rate with winbacks was 118%. Our non-GAAP gross margin for fiscal year 26 was 59%, compared to 60% in fiscal year 2025. For Q4, our non-GAAP gross margin was 57%, compared to 65% in Q4 of fiscal year 25, reflecting investments in support of our satellite services contracts and a mix of contracts including AI-enabled partner solutions. Our gross margins came in better than expected for the quarter and the year, primarily driven by the revenue outperformance in the quarter. Adjusted EBITDA profit was $15.5 million for fiscal year 2026, better than expected, primarily driven by revenue outperformance and disciplined OpEx spend. Fiscal year 26 marks our first year of delivering adjusted EBITDA profitability on an annual basis, a milestone we're incredibly proud of. Adjusted EBITDA profit for Q4 was $2.3 million, also better than expected, marking our fifth sequential quarter of adjusted EBITDA profitability. Capital expenditures in FY26, which include our capitalized software development, were approximately $81.5 million. Capital expenditures in Q4 were approximately $23 million. To echo Will's remarks, we're currently in a growth CapEx investment cycle as we lean into market demand, scale up our manufacturing capacity in Berlin, and build out our next-generation fleets. Turning to the balance sheet, we ended the year with approximately $640 million of cash, cash equivalents, and short-term investments, an increase of approximately $418 million year-on-year, driven by our issuance of convertible debt and free cash flow profitability. In fiscal year 2026, we generated approximately $134.4 million in net cash from operating activities and $52.9 million in free cash flow, representing our first year of achieving positive free cash flow on an annual basis. Our focus remains on managing the business to enable sustainable cash flow generation through efficient growth across our data, solutions, and satellite services revenue streams. At the end of FY26, our remaining performance obligations, or RPOs, were approximately $852.4 million, up about 106% year-over-year, of which approximately 34% apply to the next 12 months and 65% to the next 24 months. We estimate our backlog, which includes contracts with a termination for convenience clause, to be approximately $900 million, up approximately 79% year-over-year. Approximately 37% of our backlog applies to the next 12 months and 67% to the next 24 months. Let me now turn to our guidance for the first quarter and full fiscal year 2027. In Q1, we're expecting revenue to be between $87 and $91 million, which represents approximately 34% year-on-year growth at the midpoint. We expect non-GAAP gross margin for the quarter to be between 49 and 51%. The step down is driven by our satellite services contracts, the mix of deals with AI-enabled partner solutions, and investments in our next-generation fleets. Our range for adjusted EBITDA in the quarter is expected to be between -$6 and -$3 million, reflecting our investments to drive sustained growth. We are planning for capital expenditures of approximately $17 to $23 million in the quarter. For the full fiscal year 2027, we expect revenue to be between $415 and $440 million, representing approximately 39% growth at the midpoint. We believe our backlog provides us with strong visibility to our revenue projections, which is enabling us to raise our growth expectations for the year. Our non-GAAP gross margin for the year is projected to be between 50 and 52%, in line with our prior expectations and driven by the forecasted mix of business. We anticipate margins will expand as we realize returns on our growth investments in subsequent years. We are targeting adjusted EBITDA profit for fiscal 2027 of between break-even and $10 million, reflecting our desire to maintain EBITDA profitability on an annual basis, even as we continue to invest in our space systems capabilities, AI-powered solutions, and our global sales and marketing organization. We also aim to deliver Rule of 40 for this fiscal year, where Rule of 40 is our revenue growth rate plus adjusted EBITDA margin. We are planning for approximately $80 to $95 million in capital expenditures for the year, reflecting the necessary investments in our next-generation satellites to meet accelerating market demand. Even with these operating and capital expenditures, we expect to be free cash flow positive on an annual basis again in fiscal year 27, with a focus on sustaining and expanding free cash flow generation into the future. As a reminder, while cash flow can vary quite significantly quarter to quarter based on the timing of cash collections and capital outlays for procurements, our ultimate objective is generating sustainable annual positive cash flow. To close, the incredible momentum we generated in fiscal year 2026 provides us with a strong foundation for the future. Given the strength of our backlog and our robust pipeline, we have significant visibility into our continued revenue growth, and as our revenue scales, we anticipate non-GAAP gross margin expansion as well as Rule of 40 for fiscal year 2028 and beyond. This gives us the confidence to invest into the massive market opportunity unfolding in front of us, and as Will mentioned, we are leaning into these trends and playing to win. As always, Will and I are incredibly grateful for the outstanding execution, dedication, and teamwork of our Planeteers around the globe. Fiscal 2026 was a standout year because of you, and we're excited for the year ahead. Operator, that concludes our comments. We can now take questions.
Thank you. We will now begin the question and answer session. Please limit yourself to one question and one follow-up. If you would like to ask a question, press star 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. Your first question comes from the line of Colin Canfield from Cantor. Your line is open. Please go ahead.
Can you perhaps update us on the timing and the scaling of both the Suncatcher opportunity as well as what sounds like a pretty nascent geointelligence platform with NVIDIA? And then if you could maybe talk about how much of that was included in the set of opportunities from the Investor Day. Thank you.
Well, both are very exciting opportunities, and in a way, both involve both a space component and an AI component. Let me talk to the Google one first, since you brought that up. Suncatcher is going well. It's early days. Just to recap that project, this is about putting their TPUs into space. It's an early tech demo that is what we're doing right this second for them. It's a lot of interest in that space that you've seen in recent months. It's very exciting. It's heating up. But we're focused on executing towards those research goals, and there's a big potential market there long term. As Sundar put it, I think within 10 years, he expects most compute spending to go into orbit. That's a big amount of money. That's a huge, huge market to go after, but with very early days. So, it's exciting. We're staying focused on executing on those early missions. And then to NVIDIA, that's also exciting. It was great to announce that extension of our partnership. It's also a research partnership at this stage. You all know about the fact that we've been putting those NVIDIA GPUs into orbit on our Pelican spacecraft, which is pretty cool. This is actually more focused on the compute on the ground, how we leverage their GPUs in particular to speed up our data processing pipeline. In an increasingly fast-changing world, people want those answers really quickly, and GPUs have the potential to really speed things up. And we've seen some early results that are very promising, where big speed ups like 100x on certain parts of our coding base, getting answers to our clients faster is really important. So research collaboration, they're leaning in, and we are leaning in too. It's very exciting. But as to the revenue implications, I don't know if you wanted to touch on that. Ashley.
I mean, I would just remind you that the Suncatcher partnership is structured as an R&D partnership, so it's recognized as contra revenue. And with respect to the NVIDIA partnership, that's really just a research collaboration.
Yes, R&D.
Got it. And then as we think about imputing working capital tailwinds for 2027, is there a right framework to think about it? Maybe as like a percentage of the backlog increase, or kind of high level, kind of what are the building blocks on working capital that we should consider?
First of all, I just want to correct myself. I made a misstatement on my prior answer. It's not contra revenue, it's contra R&D expense. Thanks for letting me clarify that. As for your second question, in terms of the building blocks for working capital, obviously, as I said, as we are acquiring investments to execute on our backlog, so that includes all of the capital expenditures we need to make to build out the Pelicans for our customers. That obviously will weigh into the procurements quarter to quarter. The nice thing about the way these contracts are structured is they typically provide us upfront capital to match the timing of those expenses, at least on an annual basis. There may be differentials quarter to quarter as to when we make procurements and when we receive milestone payments. So as I said in the prepared remarks, cash flow is expected to vary quarter to quarter, but on an annualized basis, these contracts really enable us to operate the business in a free cash flow positive way.
Got it. Thank you for the color. Appreciate it.
Your next question comes from the line of Ryan Koontz from Needham & Co. Your line is open. Please go ahead.
Great, thanks for the questions, and congrats on a great quarter and outlook. Starting with maybe some of the segment, what your real strength you saw in Europe in the quarter. I wonder if you can maybe unpack that for us. What were some of the drivers behind that? Obviously, a lot of defense work there, but any kind of color you can give us on the European market and how that's been progressing so well for you.
Yeah, well, maybe I can just kick it off. I spent quite a big fraction of the quarter in Europe, going to a number of capitals, speaking to a lot of our customers there. The demand is off the charts. We are leaning into it as best we can, both for our data and AI solutions and constellation services. We talked about the interest in that going up. Yeah, I mean, it's back to the geopolitical dynamics, right? That's what's underneath this and driving a lot of this demand. They need their own sovereign systems. They need it quickly. They need speed and sovereignty, and we can offer both of those things: speed, immediate access to our present satellites, sovereignty, building satellites dedicated for them, and even that we can do very swiftly compared with anyone else. And our history of having launched hundreds of satellites really puts us in a great position to do that. So that's the sort of demand signal. Actually, towards the breakdown, I don't know if you want to comment at all on that.
We provide the breakdown in the materials. I would just say, we have historically had a very strong presence in Europe, and have a strong team in Berlin foundationally, and we've built on that with acquisitions that have given us presence in the Netherlands as well as in Slovenia. And that really helps us when we're engaging with governments across both their civil and defense and intelligence needs.
And if I could just add one final thing, of course, our commitment to building satellites there in Berlin adds to that interest. I mean, we both needed it for expanded manufacturing for our Pelicans, and it lent into the European demand because, of course, that helps connect the dots there.
Sure, that's great. And just any comments around supply chain right now? Is it getting more difficult to acquire the types of kind of key components you need on the supply chain side?
Not really. No, we're not seeing anything material.
Obviously,
Great.
it's something
All
that
right,
we
that's all I've
track
got.
carefully, and our teams are always seeking to diversify our supply chain sources.
Got it. Thanks so much, guys.
Thank you.
No worries.
Your next question comes from the line of Edison Yu from Dutch Bank. Please go ahead.
Thank you very much, and congratulations on the quarter. I wanted to come back to the AI element. You talked a little about LLMs. What's the latest, I guess, status on the Anthropic partnership, and have we kind of progressed further from kind of just testing or early testing the models or the training?
Yeah, I mean, in AI in general, as I said, we're moving from this world of LLMs that can tell you about things about the text of the internet to how models are increasingly trying to move towards real-world models, and real-world models needing real-world data. The client has this stack that's necessary. We're doing these research collaborations that we've mentioned, and they're very exciting. What they're really building a foundation towards is, we've been building these bespoke solutions, these what we call AI-enabled solutions for our broad area PlanetScope daily scan. So the maritime domain awareness solution, the global monitoring solution, and the area monitoring solution for civil government. And those are really good, and they're starting to take off, and that's what's driving a lot of the great growth that you're seeing in the numbers. But AI has this potential of making that more generic. That is, that anyone can turn up, build their own bespoke application of equivalent fidelity in short order, like maybe within an hour, and in a completely bespoke way for their needs. That is just on the horizon. And so what we're focused on with those research collaborations is how we can build towards that capability. And that is what's so exciting about that is the ability to unlock all the potential of our data, especially for commercial and civil government markets where we've been less focused of late because of the strong interest on the defense and intelligence side, but are huge markets for Planet. So basically, that's the direction and leaning of those partnerships, is enabling us to build out that capability to expand the TAM.
Absolutely. And just to follow up on that. Just to follow up on that, to I guess get there, what do you see as the biggest, I don't know if you want to say bottleneck or thing we should look out for? Is it a question of just you need more compute? Is it a question of just it takes time, more training? Like how do you think about like the path there and the bottlenecks?
Well, it's complex and evolving in that the space is changing so fast. I mean, literally, we are seeing capabilities that just a couple of months ago we weren't able to do because of the advances in especially coding. Like that makes it now that you can even build whole applications very quickly. So we are just seeing that potentially take off much faster than we thought. There's nothing really standing in the way per se. We have the data. That's the critical ingredient, and it's the differentiating ingredient for AI. And as I said briefly, in many ways, AI it's making the commoditizing more the software layer. That's making the AI piece, the data piece, most useful for AI. And so that's very differentiating that we have this unique data set coming into it. So there's nothing holding us back there, and it's moving very fast. And that's why I was saying that I think you're going to start to see this come to fruition this year. And so watch this space.
Amazing. Thank you.
Your next question comes from the line of Kristine Liwag from Morgan Stanley. Please go ahead.
Hi, this is Gabby on for Christine. Congratulations on the quarter. Given your recent decision to extend the satellite imagery delay in the Middle East to 14 days as a result of the ongoing conflict, have you seen any changes in customer behavior, and are there any potential contractual implications that we should maybe be aware of?
Yeah, I mean, the short answer is nothing material. Look, what we're focused on there is helping our critical customers in the region do the things they need, which is get critical answers fast, and trying to help them through that. We're focused and mainly heads down on supporting those customers in this critical time as best we can. The delay is a lot to do with the balance of thinking about those operational needs and making sure we don't put people in harm's way, and it's very genuine needs. At the same time, our transparency and accountability mission that we care about, and ensuring all of our actors get access eventually. So it's a carefully thought through decision, and we're just trying to do our best to help the people that need it.
Great, thank you. Super helpful color. And if I could ask a quick follow-up, I mean, you announced the satellite services agreement with Sweden in January. Can you just talk about how you're seeing the pipeline for similar deals progressing relative to what you had laid out at the Investor Day? And what are you seeing in terms of conversion timelines and potential scale of upcoming opportunities?
Yeah, I mean, as I mentioned in my prepared remarks, since that October Investor Day, both the number and the average size of those deals has been increasing. And so, I mean, just to give you a sense, that it is a strong market demand right now, even stronger than we had said then. You know, it's a bit too early to talk about sort of average deal length, because it's just, these are very few in number, right? So I haven't got any comments to that effect, but overall the demand is very strong.
Great, thanks so much.
Your next question comes from the line of Jeff Van Rhee from Craig-Hallum Capital Group. Please go ahead.
Great. Thanks for taking the questions, guys, and congrats. A lot here to love. Let me start first with civil commercial, about 40%, a little less than that of as percent of revenues. What do you think, you know, Will, when you look at those markets, obviously D&I is killing it. You've got a lot of sovereign deals flowing through, and it makes sense to be pursuing those deals. I'm wondering how you think about civil and commercial, and what dynamics have to play out for those markets to reaccelerate.
Well, as I said, see earlier answer to Edison about the AI piece, because that's what unlocks these things and enables it. And we're just on the precipice of that. And yeah, I see that beginning to come this year. And just to be clear, in my opinion, the biggest markets are those two segments, not defense and intelligence. And we think that's a long and sustaining and really great market. But the civil government market is huge. The commercial market is huge. There's so many, but it's been lacking those critical solutions. Here we have a generic way of crossing that chasm to the fuller solution that enables us to unlock that market. And so we know those capabilities, that those answers are latent in our data, and this gives the bridge to the actual solution that the customers need. So I mean, you know, it's back to my earlier point. AI is going to enable it, and I think we're going to see the beginnings of that really take off this year.
Yep. And over to the sovereign deals for a second. I mean, obviously, three mega deals here, roughly trailing 12 months, give or take. You know, It sounds like the pipeline is expanded. Sounds like you're thinking, you know, deal count there should improve. I mean, just any other observations on those sovereign deals, on the magnitude of the growth in the pipeline? Sounds like it really accelerated even further, potentially in the last 90 days.
No, I didn't want to quantify that, but just give you a sense that it is really growing and it's very strong. And that's it.
And the only other thing that I would add, Jeff, which I think is an important point, is that when we are selling these sovereign capabilities, we are coupling with that our data and solutions. And it actually is the synergies across that is a competitive differentiator, because we can drive value to these customers out of the gate. We can give them visibility and intelligence that they didn't have before, as we work with them over the longer term contract to build out what their sovereign capabilities will ultimately be. And so it's worth pointing out that actually a lot of our backlog growth is in data and solutions. In fact, that part of the backlog has almost doubled year over year.
That's great color. Last one, if I could, just on the owls. Any updates there that you could share?
Yeah, I mean we're building that tech demo as we announced last year towards that improved daily scan capability. The team's working hard on it. It's going well. It's quite an incredible capability that we're obviously building there. Just remind everyone that we're moving towards 1 meter scan rather than 3 meter, and that's roughly 10 times more data per unit area of the ground, and roughly a 10x improvement in latency as well, because they will be equipped with both onboard compute systems as well as satellite comms, so that we can get the data back as well. So those things are all going to be faster as well, so much lower latency, a 10x there too. So it's really a significant improvement on that system. And yeah, we're looking forward to launching a demo.
Sounds great. Thanks, guys.
Thanks, Jeff.
Your next question comes from the line of John Gooden from Citibank. Please go ahead.
Hey, guys. Thanks for taking my question. Really appreciate it. I just wanted to square off the backlog strength and all of the positive commentary with revenue guidance. The revenue guidance is fantastic, don't get me wrong, but even so, it just seems like there's upside to it based on the commentary of, incredibly strong demand signals, particularly in Europe, as well as the fact that as a percentage of the backlog that you guys have right now, it doesn't seem like the revenue guide is a particularly large percentage versus maybe how you've set guidance in the past.
Yeah, it's obviously a good question, John. We're in a really favorable position right now in terms of the level of visibility that we have. Obviously, there's a lot of execution that goes into turning backlog into revenue, and we are laser focused on that. And in terms of setting guidance, I think what you've seen from us, particularly in recent periods, is we try to give ourselves room for the fact that, on these big mission critical types of transactions and contracts, there are things that can shift from quarter to quarter, and we want to give room in our guidance for that to happen so that we can keep our customers, front and center around execution. Similarly, we have a great pipeline of opportunity, but when those deals land, given how big they can be, can really impact revenue in the year. And so we tend to assume that new signings are back half loaded, which give us opportunity to deliver upside if that doesn't end up being the case, if it ends up landing sooner, but doesn't put us in a position where we're out over our skis in terms of the numbers we've given you.
Okay, that makes a lot of sense. It sounds like, that there are some layers of conservatism in there, which is appropriate, and we'll see how that plays out throughout the year. If I could ask one more, just in terms of the activities in the Middle East, the conflict there, do you feel that has additionally kind of turbocharged the demand for your product in any way? I know the backdrop is strong, but has that had an obvious impact, as sort of a recent event?
Well, obviously, there's a huge amount of focus in that, and we are. But again, as I said earlier, we're just focused on delivering pieces. We're doing mission critical things. We're trying to focus on that, but we'll see. It's early days.
Yeah, I think one of the things that we have seen in these types of situations is you do see an increase in usage as there's just more urgency in getting as much data as possible around the situation. But ultimately, as Will said, situations like this can be very dynamic.
Got it. Thank you.
Your next question comes from the line of Trevor Walsh from Citizens. Please go ahead.
Great. Hey, all. Thanks for taking my questions. Will, you called out the Shield IDIQ in your prepared remarks. Can you maybe just give us a sense? I know early days on this very large project and a lot of it's sensitive, but can you give us a sense of how you're thinking about that opportunity? Is that something where it's just kind of bread and butter Planet Labs Earth observation data that you would be providing for that as you go after contracts and opportunities there, or might it even look like something more of akin to satellite services where you might even just building spacecraft that are fairly non-traditional for you guys, but just being used for all the things that are part of that project?
Well, yeah, as you say, it's early days. There's obviously a big opportunity. There's huge budget behind it, but the specific ways in which we fit in will have to be figured out as we understand the architecture, and they're still working on many of those aspects. There are, of course, ways in which our present data sets could fit into that, early warning of certain things, strategic analysis across the board areas. That obviously makes sense. But right now, that is merely a vehicle, and when we'll compete on awards within that, and that's the same for all the people that have got awards under that system. So yeah, but obviously finding unknowns, there could be specific missions, but it's very early days to be thinking about that. What I will say is that we're continuing to lean into specific opportunities that are very live right now, like with Luno, with our Navy customers and others. So, we're seeing a lot of interest in co-coms around the world. So, the department has a lot of interest across the board, and we're leaning into it.
Great, awesome. Appreciate that. Ashley, maybe just one follow-up for you. I appreciate the color you gave around free cash flow. I know you guys aren't giving an official guide, but just given how strong you guys ended this current fiscal year, and as we think about 27, there's obviously there can be a bit of a step down from just going from 50 million to something that's just generally positive. So just want to make sure we don't get just given the CapEx spend and everything else, if you could just give us a little bit of maybe guardrails as to how we think about that for 27, that would be great.
Yeah, I mean, first I'll just reiterate the point that I made. We definitely expect there to be pretty significant fluctuations quarter to quarter. Just like I said, timing of procurement versus timing of milestone payments can cause, one quarter to be much more positive and another quarter to be, significantly negative. So that's one caution that I provide, and that makes it a little bit harder to give, very precise guidance around it, which is why I haven't. And to your point, depending on, how much more of this opportunity we continue to realize, it would not make sense for us to optimize expanding free cash flow on the year versus setting ourselves up to both deliver against the contracts we have and to bring more on. So if that offers enough color to you without giving specific guidance, which I'm really not in a position to do, we're not focused on, sustaining or expanding free cash flow from last year, but really focused on balancing it quarter to quarter and leaning into the market.
That makes sense. That's helpful. Thanks, Ashley.
No, thank you.
Your next question comes from the line of Greg Pendy from Clear Street. Please go ahead.
Hey guys, thanks for taking my question. Just one quick one, just so that I understand kind of the approach on this year of leaning in terms of the commercial and civil side. I mean, it's hard to think back, but you did have a cost rationalization program at one time, and your sales and marketing is down around 15% from fiscal 2024, yet your revenues are up roughly 40%. So is it kind of that the customers through Anthropic will figure out how to use the data and how valuable it is into their daily workflows? Or do you think that, you'll need some boots on the ground to educate the civil and commercial markets? Thanks.
Yeah, Greg, it's a very good call out. We did, realign the team across the board to really focus on where we had the largest account opportunities, which I think did disproportionately impact, how much resource we were putting behind going after a more distributed commercial market. And as we said, we were building out the platform to enable smaller customers to really access the data on a self-serve basis. I think as we are growing those markets and leaning into the AI that Will highlighted, we will be making some targeted investments in those markets where we're seeing the most traction out of the gate. So we do have feet on the street going and meeting with customers and demonstrating for them. And that is a really exciting part of these new capabilities that we have, is we can really show, not tell in these customer meetings, all the things that all the insights you can extract from the data to answer their specific questions. So we did a lot of training with our sales team earlier this year, really showing them how to use these tools in demo environments. Obviously, the world has changed a lot in the last 6 years. You can do a lot of that without putting people on airplanes, but it will require some investments across sales and marketing. And I did highlight that as one of the investment areas for us this year.
That's very helpful. Thanks a lot.
Your next question comes from the line of Alex Lattimore from Northland. Please go ahead.
Hey guys, excellent quarter. Alex Lattimore on here for Mike Lattimore. I had one question. I just wanted to hit on guidance one more time. Good raise on guidance. I was wondering if you could talk about what assumptions are factored into that raise on guidance. Does this assume any new 8+ figure wins or any commentary there?
Yes, thanks, Alex. I'd say we're very balanced in terms of how we think about those types of opportunities that may be in our pipeline, because obviously those could swing outcomes based on whether they come in or not. So typically what we'll look at is a pipeline of opportunity where if an 8-figure deal were to fall out of the pipeline, what type of backup we have for that opportunity, and then probability adjust it. So we are definitely looking at active opportunities, probabilities, and then giving ourselves room for those deals where maybe we don't have enough pipeline to make up for that one landing on time or in the year, which gives us opportunity to outperform. And like I said earlier, it doesn't put us in a position where we feel over our skis.
Awesome. And then one more. I just wanted to hear if there's any footholds in the Golden Dome initiative. I understand there was a $10 billion incremental add to the Golden Dome initiative for space-based capabilities. I'm not sure if you're seeing any demand there for planet systems, but any commentary around Golden Dome would be helpful.
Yeah, I sort of said all that I can on that at the minute. It's very early days as they're architecting that system, and there are potentially that's. The SHIELD IDIQ, just to be clear, is the Golden Dome. And so that answer was about that. And again, it's a framework that we have, and now we will bid for actual awards under that program. So, but we don't know what they are exactly yet. And when we do, we will respond. But per my earlier answer, the general thing is giving domain awareness and other things that could be useful for that. So, but we obviously have to wait and see what comes through that.
Mm-hmm. Awesome. Excellent quarter. Thanks, guys.
Thank you.
Your next question comes from the line of Caleb Henry from Quilty Space. Please go ahead.
Hi, guys. Thanks for the call. Couple of questions on satellite manufacturing. Actually, first one, sorry, on Pelican. I've noticed that you guys lowered one of the Pelican satellites a little past 400 kilometers recently. Is that part of a larger fleet migration to a very low Earth orbit, or is there another way that we should think about that?
Yeah, we lower spacecraft, of course, to the operational altitudes, and Pelican, part of the reason we call it Pelican was to fly low. Pelicans fly low to the water, and so we were sort of mimicking that when we were talking about this. And they have ion engines such that they can fly really low. And in time, that is part of the process that gets us to the 30-centimeter ultimate resolution target for those missions. But no changes to the plan. Those were just operational adjustments as we will start always with the satellites in a slightly higher orbit and bring them down to operational orbits as we progress. And by the way, you may just on Pelican, you may want to look in the associated deck with this earnings. There's a few really cool pictures of some of the fast response timelines. We had 3 pictures in about a year. It's very exciting to see in an hour, not yet. In about an hour, and just other great performance of that system. So it's very exciting, and we've got multiple launches for more of those systems going up this year. So it's exciting times. And was there a broader question about the manufacturing?
Yeah, I definitely kind of looked through those pictures, but looking at the contract for Sweden and tying that into manufacturing, is that Can you give a sense of when those satellites are supposed to be delivered and how many satellites? Is that sort of the reason for the ramp up in manufacturing space in California?
Nothing specific, I'm going to say specifically to that customer, but we're ramping up because of the demand overall, right? And we're building fleets for multiple customers as well as for our own system. And that demand is obviously already clear, such that we're expanding here in San Francisco and in Berlin.
Okay. And then last question, I was just curious if you could shed more light on what makes 2026 the year you first anticipate seeing a return on investment on AI. Was there more of an aha moment that happened, or is this just the natural evolution of the years of investment and how customers use Planet data?
Yeah, and that's an oversimplification because, I mean, we've had revenue from AI a fair bit before. What I mean is in terms of the big way in which AI can unleash those other market potential. And I think we're going to really start to see those generic solutions that I mentioned, ways in which anyone can turn up, build an application that's relevant to their needs, and then start getting value. That unlocks the markets that we've been talking about for years that are latent in our data: agriculture, energy, insurance, finance, so on. And so I think that it's just more that I see that all the pieces are coming together such that that will come to fruition this year, and you will start to really see that take off. Just like, you know, the constellation service or satellite services really started to take off in FY26.
Thank you. That's all the time we have for questions today. I will now turn the call back to Will Marshall, CEO and co-founder, for closing remarks.
Well, I'd just say that obviously it's great to see the business doing great, both in the satellite services and in the AI-powered solutions side. And we're very proud of the financials that we reported today, not just the beating the revenue expectations, but I'm especially proud of the backlog improvement to $900 million and achieving the Rule of 40 again in the quarter. And it really has set us up for a strong foundation for this coming year. And given that backlog and confidence in our pipeline, we've projected, you know, quite strong growth again for this year. And that's why, and even for years that follow, which is why we're investing this year strongly into that market opportunity. And like I was just saying, this is the year for AI for Planet. And I think this bridge of the solutions gap will unleash a huge opportunity latent in Planet's data. I just want to end by thanking our teams as we started around the globe that have enabled all of this to be possible. Thanks again for joining, everyone.
Thank you.
This concludes today's call. Thank you all for attending. You may now disconnect.
Thank you. Make sure you guys hit the like button on your way out. Crazy stuff. Crazy stuff. It's crazy that this tiny little company has the same market cap as GameStop. It's pretty funny, bro. 1.1 billion in assets. Like, how is that even? I mean, obviously markets are not efficient, so obviously something like this can have a 10 billion market cap. It's not like impossible, but it makes me more confident in my investment that a dog shit company like this is valued the same as a multi-billion-dollar company. It's pretty interesting. Pretty interesting. I know nothing? Okay. I'm a better investor than you. Congratulations, you made 17% on what, a couple $100? Good for you, buddy. Good for you. You can be banned. I guarantee I'm a better investor than you, and I've made more than you, so I probably know more than you. Just saying. I know a lot. And I know a garbage company like this shouldn't be valued at a 10 billion market cap. Anyone with half of a brain knows that. But if you made money, congrats. You can also hit a jackpot, You can hit a sports bet. You can make money a lot of ways that don't make sense. Too many shit talkers on Wall Street, though. Too many people that think that just because they hit a stock play, they think they're smart. It's not really how it works. I've seen so many stocks that are complete dog shit go up hundreds of percents. Literally means nothing. So, if you think you're smart because you hit a stock play, I mean, you have a lot to learn. But I guess nobody's here. So, tomorrow's Friday. Maybe we'll stream tomorrow. Who knows? We'll see. But appreciate you guys. Hit the like button. And I'll see you sometime.